All right. Good morning, everybody. Happy Thursday. Welcome to the morning show, Stock Market TV. It's already a day. Yesterday was a day. Overnight was a day. Today is a day. Sheesh. I don't even know what to say. I was reading this morning from Grant, the number of the day that we haven't had a 3% down day in the S&P in since 2022. Well, based on the futures, we're going to get there today, right? I'm looking at the S&P futures down 3%, Nasdaq down 4%, Russell down 4.5%, Dow only down 2%. Good job, Dow. Yeah, we'll talk about all this, the reaction to the tariffs. I have to admit, I am surprised. I'm so used to all these headlines being just noise. I didn't expect tariff numbers like that, and therefore a reaction like this. But that's what we got, right? We control what we can control. The market's moving, it's moving down, and we have to now deal with that. So someone was asking what JC thinks of tariffs. I don't know what JC thinks of tariffs. JC is in Florida right now. He was always going to be out today and tomorrow. He'll be out. He'll be out actually for a week. He'll be out until next Friday. He'll be back. So he's on spring break with his kids doing the beach thing. I do have Strazza here, and let's see. We'll have Kenny, we'll have Sean, we'll have Steve Place. But yeah, today's going to be a day where we just sort of wring our hands a little bit and talk about risk. I mean, credit to Steve, and we'll talk about this as well when I bring him on in a minute. But he's been putting on some bearish trades and breaking a multiplier. It's been working very well for him. I'm sure he will have a few more trades to close out today that have doubled or more. A lot going on. I don't know, chat. What do you think? Yeah, look, I get it. It's funny that JC is not here too. He was never going to be here today. We didn't say that, but he was always going to be out of Thursday to Thursday. So that timing is what it is, right? It's unfortunate because I imagine he would have loved to be here today and talk about sort of his, strategy and his thought process on all this. And as I just said, we don't get days like this very often. We haven't gotten days like this very often. So, yeah. All right. Yeah, exactly right, Jeff. Kenny will be on fire today. He's been messaging me all morning. Kenny is on fire right now. So we'll bring him on in a few minutes and see what's going on there. But it is the Strazza show. So let's start this off. Steve, is your technology working? What's going on? All right. I'm waiting on Steve to get his technology together. So I don't want to bring him on until the technology, the camera, the microphone are working. So in the meantime, here, I'll run our intro and then I'll bring Steve on when he's ready, which will be right now, I think. Hey.
Good morning. I was just so deep into this tariff stuff, I forgot we even had a show.
Yeah.
For real.
It's been a day, man. It's already been a day. The day is young. It didn't even start yet, but it's already been a day.
So awesome. No baby blue today. Blood red. Should we talk about it?
I guess. I mean, I have a screenshot here. It's not current of the after hours. This is a heat map from the after hours session last night. So it's not these numbers aren't up to date. But on slide 4, there it is. I mean, it's just a bloodbath, right? Just everything. I was trying to find. I was looking for like what's up this morning, right? You got alcohol stocks because they were spared, right? You got some healthcare stocks that are up this morning, and then you got like just random here, like Lamb Wesson is up 5%, right? You got random things that are up, but by and large, it is some healthcare in it. I said healthcare already. It's a bloodbath. It is a bloodbath.
The UK holding in surprisingly well. Let's talk about some that are really holding it. Now, remember, Spencer, when you buy the international ETFs, right? Because you're absolutely right. Everything's getting hit across the board, but be careful. When you watch the television, they'll show you something like what the German DAX is doing. And it's not good. So it's the DAX is down, what, like 2% here today? About 2%. However, because the euro is just kicking the dollar's ass, best day for the euro in, God, I don't know how long. You got to go way back. This is going to be the euro's best day since the bottom in late 2022.
Really?
So this is super interesting. Now, what happens is if you buy something like the MSCI Germany,
Up 2%.
you're not buying the DAX, you're buying EWG. You're a US-based investor. You got to move from dollars to euros to get into German stocks. This thing's holding up particularly well, flat on the day because the euro is offsetting the downside in the stocks. And then you have other things too that are going on. So it's an interesting currency story today too. The real, which we've been talking about, breaking out to its highest level since last October. So EWZ also holding up particularly well. So there are pockets of strength. Then you go and you look at something like Shopify. It's down 12% in the pre-market. So there are going to be winners and losers, at least it seems like on this initial reaction. No?
Yeah, good point. Good point about the currency effects. I hadn't looked at that super closely, but yeah, the euro's up 2% today against the dollar.
Yeah.
What else
Dollar's
do we have?
killed.
Dollar's getting destroyed. Dollar yen down 2%. Pound dollar up 1%. So yeah, it's dollar's getting destroyed. I mean, everything is getting destroyed. I mean, even gold.
Yeah.
They're taking gold out this morning.
Yeah.
Sheesh.
Yeah, no. That's how it works. That's how it works. We're just selling them, Spencer. This is gonna be holy cow. Vietnam down 9% pre-market. So this is gonna be one of those potential washout days. Here's the problem. Let's talk about it. The uncertainty's not gone. Okay. I got updated on what's really going on here. This is just step one. So what happened yesterday? The US came out. You can't unilaterally make a tariff deal, right? Or a trade deal with another country. It takes two, right, Spencer? So yesterday, the US came out and said 34% on China, 20% on the EU, 24% on Japan, 32% Taiwan, 10% UK. UK made out. People think Canada and Mexico made out too.
Yeah, do we have that graphic? Can you put that up?
31% on Switzerland, 49%. What did Cambodia do to us? Anybody else wondering what the hell Cambodia did? 49%.
You know what was funny last night is I watched this happen. I feel like I watched it in real time. I watched people one by one figure out where the number on the left came from. Right, because at first it was like one person, and then by the end of the night, it was like my entire timeline on Twitter and Reddit, mind you, was people figuring out, or they were just copying what the first person realized, which is that number is just our trade balance expressed as a percentage, right? So,
is that right?
Yes, that is what that number is. So
that's an implied tariff. Well, I don't understand. That's not correct then.
Implied is a strong word.
Yeah, it doesn't make sense.
It makes almost no sense, actually. But,
no, the internet's crazy.
That's where the number comes from. Right. If you look at our trade balance with each of those countries, what they send us, what we send them, you divide the numbers. That's what you get. So it was fun to watch that kind of trickle across my timeline one by one last night. It was fun.
So the problem is with all of this is this was just step one. Now the other countries have to come back and either play ball and offer some sort of conciliatory tariff rate or fight with the United States. And the initial reaction, at least, and for sure, there's going to be a lot of BS, and it's like a poker game, right? In a sense, so you can't trust everything you hear. But for now, Germany's coming out. China's coming out with some very strong initial language. Germany is suggesting that the EU should basically band together in this effort. I guess that makes sense. So the uncertainty is still on the table. The market wants to know, okay, it's going to be 30% China. They just want to know for now, right? And then there's going to be obviously a degree of how long does this last as well. It's just getting started. So I don't think maybe the market really finds a durable bottom until that uncertainty is completely swept away. And I think this could just be the beginning of the process. Maybe the market bottoms a little bit before it. But for me, Spencer, for something we made such a big deal about, this is like step one. This is just getting everybody else to the table. I thought they were going to come out and announce like actual deals were made, like both sides agreed to something happily. That's not what yesterday was.
I'll play devil's advocate for a second here. Obviously, these numbers are like insanely high, right? These tariff numbers that we're going to be allegedly enacting on these countries. Is this not just like classic negotiation 101? You start at a ridiculous number, that's not the number, and then you come down, right?
And that's exactly what they did,
right?
Correct?
I mean, I don't know what they're doing, but that seems like it makes sense.
Some sell side shops and hedge funds had tried to come out and forecast numbers. And what happened yesterday came in well above any, I don't know what the expectation really was, but it came in above apparently what some people's expectations were, right?
Oh yeah, like the forecasts were a joke. Yeah, 10% is what I saw.
Yes. So Trump he hit it out the park with the 40% on 49% on Cambodia. This is crazy. So we'll see. Here's the thing. I'm watching the cable news and it's so sad. They all have such strong opinions. Spencer, I'll tell you, some of them are calling it T-Day. The other ones are calling it Liberation Day. The Republicans and the Democrats on the news can't even agree on what fucking day it is anymore.
I mean, if I could steal a line from Jay Woods this morning, I mean, I'm liberated from my money this morning. That's what's happening. I've been liberated. I've been freed. Right?
The irony of the situation that we announced something called Liberation Day to free ourselves from the chains of the rest of the world. It's just where to begin.
Free me from my money.
Wow. You have conversations and this is impossible for most people. Okay. Yeah. Understand. This is a super complex topic. To be 100% clear, I have no opinion on it. Okay. Are we paying more than the rest of the world? If you just looked at it, right, objectively, knowing nothing else, it seems like we're getting ripped off. However, it could also be argued very logically. You can make a very sound argument that it's fair, that it's unfair. Does that make sense? We're the United States.
Because it's been so good so long.
You want to upset the apple cart?
Yeah, why? I mean,
here's the problem. You start disrupting supply chains, you throw some tariffs on, the whole thing breaks down. There's going to be hiccups along the way. However, maybe if this works and the United States can negotiate far more competitive trade deals, we're not in the best position with our national debt and certain other things, right? This could be a huge win in the long run. It could be. I'm open to it, right? I'll come on here and say all these negative things. I don't like the fact that it's crashing the market. I think it probably could get worse from here. However, if you look out and the United States could finally negotiate some far more favorable trade deals, it's a net positive for the country.
Okay. Yeah. So yeah, look, as you said, it's complicated. You and I obviously are not economists, economic experts, trade experts. We don't know anything about this stuff, but let's talk about what you do now. So I think we're in agreement. I think most people are probably in agreement that there is more uncertainty to come. Like you said, this is kind of really just the opening salvo, right? That being said, potential washout day here. We're going to open 3, 4, 5% down, depending on which index you want to look at, right?
Yeah.
And that's true across asset classes. I mean, that's true for stocks. It's true for crypto. Bitcoin's down. I mean, yeah, it's true for everything, right?
Yeah.
So now what? What's the approach today? And you've been super active, right, with your break and multiplier trade. So and that from the short side. So what is the approach today?
The approach is kind of be more selective. You could take your shots. We're taking profits a lot quicker, like for at least for breakout multiplier, where we're looking for trades. We make two determinations when we put on a trade. We think of what is the likelihood that we can get a quick double and get our money back, and then also what is the likelihood that this becomes some sort of a runner or a big trend and we can get a multi-bagger out of it. In a normal trending market environment, I'm probably going to weigh the second thing more and favor the ones that give me an opportunity to get a multi-bagger or a big home run. The doubles come pretty easily. In this market, I want that double first, right? That's the first thing I'm thinking of. What gives me the highest probability of just getting my money back? So we've been taking shots on the long side, been taking shots on the short side. So we're positioned for both. We're long a bunch of puts right now, for example, that we've already sold doubles, and many. We'll sell the rest today. But that gives us downside exposure. But we're also long. So if we had a ripper yesterday and we were up 5% today, we would have some multi-baggers on the long side. For now, that kind of has to be the playbook because we're not getting much follow through in either direction. So quick profits when you get directional moves, I think is the case for now, as long as the market remains messy. The U.S. stock market is, and you can't argue it anymore, undeniable in a bear market. The rest of the world appears to want to follow. That is the predicament that we are in.
At the risk of sounding cliche, are certain parts of our market uninvestable right now? I mean, discretionary is getting destroyed right now. You look at Nike this morning. I mean, heck, look at Apple this morning. Apple is an everything stock, right? But it is a consumer goods stock at the end of the day. And Nike wrecked. Restoration Hardware had earnings last night, wrecked. They're at 5-year lows this morning. I don't know if there's anything good there. So
Nike's down 9%. Holy cow!
Yeah, it's so yeah. Maybe certain areas are you can't buy them right now.
Well, I hope you diversified your bonds when we talked about it yesterday because the TMF is up 4.25%.
We talked about that. How is the WTF doing?
TMF.
WTF is unchanged overnight. Great hedge.
Spencer, to be fair, I am sitting here thinking to myself, well, Bitcoin's holding up awfully well, isn't it? No? It's really, listen, it's been showing relative strength, but like you're seeing it day in, day out, and it's still holding. Like Bitcoin can't be tariffed, first of all, to be clear. It's got nothing to do with any of this. The cryptos have already been in a massive drawdown. If you look at the altcoins, this bear market's been going on since December. If Bitcoin holds here, this is the August VWAP that we've been literally tagging every day for the past 6 or 7 days now, 81 change it comes in. If we hold here and bounce higher, notice how Bitcoin is not making a new pivot low like the broader market, like the NASDAQ, right? So to me, that is a quite notable divergence. There's some serious relative strength there. However, you could look at something like Solana, and if Solana's blasting through 120, doesn't dig in right here, I think Bitcoin follows. But I'm open to it.
Here, wait. Let me pull up a Bitcoin chart. So, is it just possible that that anything that was already in a downtrend, like Ethereum, for example, is going to just or any stock is going to get hit harder today? Of course, that's going to be the case. The things that were holding up better before are probably going to still hold up better today, right? If you were in a downtrend, you're now in a bigger downtrend, right? That's what's going to happen, or that's what is happening. So
today is a great day to look for relative strength, not just in the U.S. market, but I'll be looking internationally. That's what I plan to do all day, Spencer. I'm going to be running scans nonstop. I'm going to run them again at the close, looking for these pockets of strength. Things that are holding up in a tape like this one, deserve our attention, period. So this is one of my favorite things to do. Wait for a super shitty tape, right? Big down day like today, and then go fishing. You're going to find some really interesting stuff.
You've got it. In the U.S., you've got it. It's healthcare, right? That's what you've got this morning. And you've got, a bunch of random, maybe that's because there's a lot of international in healthcare, right? You got these random European companies.
Well,
Like,
also RFK already punched these stocks in the face a couple days ago.
yeah, that's true.
But yeah, you're right. Look, Pfizer.
I mean, you got like Sanofi, like Sanofi.
J&J up 1%.
Sanofi is French, right? I think so.
AstraZeneca's like ripping today.
AstraZeneca, what are they? Are they Swiss?
Hazy ends up 5%. AstraZeneca, long tariffs.
Yeah, I believe they're Swiss. I don't know what GSK is. That might be American. I really don't know.
Yeah, Wavy, I think, has the right idea. You can go too far with that, right? Like, let the market tell you who doesn't have anything to do with tariffs, or just let the market tell you which ones are the ones that people are moving into right now. It might be less to do with tariffs, and just maybe it's not a big impact from the new tariff news. But you'll find groups that are getting bought today, right, or at least being favored. So Wavy had said, where is it? Strazza, thoughts on insurance companies? They have zero to do with tariffs. That's, I think, the right way to think. But let the market tell you what those winners are, right? Find those green shoots.
Well, of course, utilities have nothing to do with this, right?
There are plenty of groups that have nothing to do with tariffs. You go find them.
Right. Okay. All right. Let's see what Kenny is doing. I imagine he is having himself quite the morning. Let's find out.
It's been a long time coming. They ain't cuffing my clock, they tugging. Putting up numbers, 99 pounds, and I still kept it 100. Hold up. Yeah.
Good morning. You like Little River Band?
Sure.
Look at you. You're all like dolled up. You got a haircut and a shave?
I did it for you.
Thanks.
Are you having a good morning? I think you are probably, right?
No, I'm just happy the electricity came on. The water was coming out of the faucet. My coffee was brewed. I'm just sitting here. I did one trade in the Qs, but it was short-lived. But yeah, this is wild stuff, right?
Well, I mean, you are America's favorite perma bear, so
yeah,
you should be, in theory, you should be loving this. Right?
I'm just happy I got people out of Newsmax in the 200s. That was awesome.
Man.
I mean, and the string of IPOs that followed after that were just comical in itself. People getting all excited about Chinese IPOs suddenly with the symbol WTF. I'm like, really? You getting excited? Okay, let's try to get a borrow. And then the borrow rates went up. To short 100 shares of Newsmax yesterday cost you $500 for 100 shares. Yeah. So, but the other one, WTF, only cost was only $90.
Well, WTF is barely down this morning. It's not.
Well, it was down from yesterday. Yeah, once it rolled over, broke.
Yeah.
Yesterday was the day. Yeah, it was crazy. Yeah, and then just all of them. You had Top W, which all the kids started talking about. I was like, come on, so this is on the Chinese IPO. I mean, the name of the company is Top Win International. Really?
The Newsmax was those things are like impossible to like predict in any way, but having your VWAPs as a guide on Newsmax, incredibly helpful, Kenny.
Also, just understanding price action. So when I said, listen, if it gets through the 50s, it could go to 250, is just based on what I witnessed back in 1999. That price action, the 1750 gets you 20. Once you get into the 30s, you usually go to 50. If you go through the 50s, you generally go to 80. It doesn't usually happen in one day. But
14,
right?
What they go from 14 to 280,
1750 to 280, but it was a 24-hour process, and then the collapse was just as amazing because once it was actually hanging in there at 120, but once it gave way through the 120, that was it because that was the gap zone from the first day of its IPO, and once it got through the 120, there was nobody home. So just fascinating price action. Like I was talking about it yesterday, I was a little speechless. I never thought we'd see that again, and there it was. So
the timing of it is incongruous. I don't know if I used that word correctly, but it sounds right. Just the fact that this happened, that happened days before this other market-wide event happened, right? So they got in the nick of time.
I got to tell you, I had flashbacks to the Bear Stearns moment because during that crash, I was shorting Bear Stearns, right? And then there was a rumor that Warren Buffett was going to come around. And I'm like, all right, well, there goes my short. I'm going to get killed on this thing. And then there was news that morning that there was a deal for Bear Stearns and the stock was up. And I got my friend on the phone. I'm like, I think we're going to get killed on this trade. And he's like, what are you talking about? I'm like, what are you talking about? He's like, look. And it dropped 30 points out of nowhere. Yesterday, during the tariff conversation, we were still going up. And then he bust out the charts and he went nuts. South Korea, 25%, 15%, 48%, 30%. Who wants a percent? I got 12% for you, 50% over there, 12%, 9%. And next thing you know, I thought it was a bad print. I went back into the room. I was like, wait a minute, what the hell just happened? So it was kind of like, it was very, very weird. We were ticking higher during the speech, and then suddenly all hell broke loose. It's like, what, I don't know what the key word was that got triggered, but man, it was just the same exact moment where it was like an illusion, and then reality set in. Pretty wild.
All right. I know we say this every day, but today especially is probably a day, if you're not in Kenny's room, you're going to want to be there, because we don't get days like this very often. As I said at the top, it's been 3 years since the S&P has had a 3% down day. It's going to happen in all likelihood today, right? At least based off the open.
Oh, yeah. And normally I'm a buyer here at the open to play the kind of like the fade. You can't be buying right now, especially as UVXY is ticking higher. So I was just talking about this. And guys, please follow me on YouTube and TikTok. We're having a lot of fun. The way I'm looking at it right now, UVXY is going to be my baby, because if UVXY eventually, no matter what the market does, because usually Thursday bloodbaths get worse because it gets bad on Friday. Nobody wants to hold over the weekend. Monday gets sometimes even worse. And then you have a turnaround Tuesday. If it plays out like that, we're talking about Qs looking at 420, which is the real support. That's the August fake yen carry low, that 420 in the overnight session, 420. Yeah. But I'm just going to watch UVXY. If this thing's ticking higher, you do not want to try to buy this dip yet. So I'm hoping UVXY is over 30, just crush the market, and let's get this UVXY to 40 into the 50s. And then I'm going to take out money out of the bank to short this thing. And because it always reverts, there is not many guarantees in trading. UVXY inevitably always goes down. If you know the product, it's built to go down. Once the major fear, what we're in right now, dissipates, that stock will revert and goes down 20 to 30% to start, and then usually gives it Jerry Orr back. So that's what I'm looking at right now. It's keeping me, again, obviously I'm not looking to short this market right now, but wow. So UVXY breaking, coming to $28. And yeah, that's what I'm gonna stay focused on. And guess what? Earnings season's coming. So April 11th, we'll be talking about the airlines and the banks, and we'll be very, very focused on what we do. That trade that we set up is very great. And if this turns out to be one massive faux show, bro, listen,
you'll be there for it.
I'll be there for it. Right. So look, there's going to be a rip your face off rally in the next 3 days. It's going to happen. It might be good for a half an hour or an hour or 2 hours. We'll be there, and it'll be glorious.
All right. If you join Kenny's room today, you'll also get access to his schmooze tonight, which he does every Thursday. So
hanging out.
Thursday. So into the evening. All right, Kenny Glick, thanks a lot, guys. Hitthebid.com. Be there with him.
See you, boys.
All right. And yeah, like I said, days like today don't happen very often for someone like Kenny, who is getting down and dirty. I mean, this is like must-watch stuff, in my opinion. What Steve's going to do is he's going to go scanning for relative strength. What I'm going to do after this is I'm going to go watch Kenny. That's what I'm going to do. See what he's getting up to off the open. All right, let's bring on today's featured guest. We got Steve Place in the house. He's sending us over a few charts. And I think we just got to talk about what he's thinking and what he's doing. I think it's the same question for everyone today. What are you thinking? What are you doing? Right. So let's find out from Steve, and it'll be me, Steve, and Steve. This is Steve's show.
Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
What's up?
Well, hey, buddy.
Hey.
How you doing?
Great shirt.
Thank you. It's my chunk shirt. You know, seen the Goonies? Truffle
Yeah.
Shuffle?
Yeah.
Yeah.
Good old Florida man. You're really always representing.
Wait, Steve, you're at the wrong camera. You're looking sideways.
No, I know. I'm not
Okay.
going to stare at you guys.
Okay, I'm just checking. Okay,
I'm going to flex a little bit for you guys. I can look, guys. Everyone calm down. All right, let's just say that first.
You know, thanks for coming on. You know, on a day like today, I probably would have canceled if I had to do any media today. Ever do that?
No. Why?
Yeah.
Do I have like a booger in my nose or something? Or
No, I mean, what's a day like today? What's that mean for you? Are you busy? Are you doing different things? Do you need to be there for the open? Like,
so I know my
things
stats,
change.
and
Yeah.
I know that I am a reversionist by nature into days like this. So I don't really touch the open because I'm an idiot like that. Right. And it's both long and short. Like if we have a parabolic rip, I'm like, oh, I want to short the shit out of this. And it's like, no, just wait till after lunch, man. Take a break. Just hold on. And just go from there. So yeah.
Will you take profits into? Will you be taking profits into a directional move like this morning?
I don't have a lot of shorts on right now, so no. If I were short, so let me just back up I'm going to try and anger everyone in the chat because everyone's really angry right now.
Good.
Love it.
I don't know if you guys traded Fiscal Cliff 2011.
No.
It was an incredibly politically contentious time, and everyone let their political emotions bleed into their financial predictions. As it stands right now, even though this is a bloody move, 4.5%, this is in the context of where the NASDAQ closed, you know, and so we've just undercut the lows by about 1%. Right. So I'm not saying it's not bad, but as it stands relative to what we've seen over the past month and the past vol, this is still kind of normal, as weird as that sounds. And I know I was listening to you guys and looking to pick winners and losers, and everyone's looking at Nike and, you know, Amazon's got risks and everything like that. My contention has been tariffs don't matter. It's just the risk of the day, right? And everyone once we get obsessed with the risk, it kind of becomes its own thing. It takes its own form and then starts driving the market a little bit. But what it really comes down to right now is that we have 7 stocks that are bullying the market, right? 7 stocks are 50% of the NASDAQ, 35% of the S&P. If those things don't take a shit, the market's not going to roll over. And that's it. So it has nothing to do with tariffs. It has to do with the positioning and liquidity on the institutional side. If there's still a lot of people that are stuck right now, they're going to get screwed. But I mean, as it stands right now, I know Kenny's looking at UVXY and it could completely like explode right now, but we've still made a lower high in front month VIX futures while the S&P is making a new marginal low. So there is a divergence right there. It doesn't seem like risk is getting blown out in the options market just yet. We'll see if it happens on the open. But if that doesn't happen, then everyone who has been like freaking out for the past 24 hours is going to put in a durable low. Right. And Kenny was right. It might be Tuesday. It might be something like that where we do get that face ripper, but just everyone relax a little bit and just start thinking about second order effects instead of trying to nail the exact bottom today.
I don't hate that take. I don't hate that take. Speaking of the Mag 7, did you hear that quote out of Washington yesterday? All-time quote when they were asked about the market's reaction, and they said that's a Mag 7 problem, not a MAGA problem. And I thought that was just a great line. I thought,
yeah,
wow.
Yeah, and the thing is, like, even if the tariff thing wasn't the thing, there still would have been a thing that would have spooked enough people to take Tesla out and take Apple out and take Amazon out because it was just time. Everyone was entirely too over their skis, you know, doing all sorts of, and there's some complicated derivative shit that's going on underneath the surface that, you know, is still introducing some risks into the market, and we're paying for that right now. But if those risks don't manifest again, then, you know, it should be okay. So going back to like fiscal cliff and Ebola and all of these other crisis kind of things, we have just shifted from a known unknown or an unknown unknown to a known unknown. We now know what the rates are, and everyone can start like doing the math and stuff like that. And that changes the perception of risk, and it changes the liquidity structure of the market right now.
The market's still plagued with uncertainty, but at least they made this first big step towards negotiating and getting to what these rates will eventually be.
Yeah.
It's the first big step. So it's less uncertainty, but the market's still kind of plagued with uncertainty.
Right.
I like what you said about Mag 7. For most people, we can come on here and talk about, oh, look at the strength in energy, look at the strength in international. Fine. You're always going to find pockets of strength. But U.S. growth, if you lose those stocks, you really lose the market. They dictate the tone. Everything just really gets harder from a trend perspective.
Because that if liquidity gets pulled from Mag 7, it gets pulled from everywhere, and then just vol picks up. That's just what happens. Yeah.
So what do you do when those stocks struggle and the broader market, comes under this broad selling pressure?
Well, I've been trying my best to ignore those stocks, except Tesla. I did try and nibble in Tesla recently.
Yeah, me too.
I've been looking in lesser known pockets, been looking at energy. There was a really nasty parabolic sell-off in offshore oil drillers earlier this last month that a lot of those started to V bottom out. So I've been looking at that. I've been looking at some small cap space stuff. If everyone knew that the tariffs were going to come, then you can start looking at stock. We're going to look at winners and losers. Defense stocks, software stocks. I'm not sure how much software is actually affected by tariffs, and but as investors, especially on the institutional side, start to pick this apart and they say, okay, where can we park our money that's safer, or where can we park our money that's a little less risk? Then that starts to just, if we see rotational dynamics involved, then that can also help, buoy this market a little bit more. Because if like Tesla bottoms right here because they've got American manufacturing already, then that's one of the 7 that starts to get fixed. Yep. I'm not sure how Meta is drastically affected because they're selling Ray-Bans and that's about it. Right. So it's one of those things where one or two of those names, if they just start to catch a bid, because it's, if you're an institution, you say, I got to park a shit ton of money somewhere that's not going to be affected by this. It puts in a floor in one or two of those stocks, and then the selling doesn't roll over. I know I'm going to look like an idiot by the close. I'm a reversionist by nature. I understand momentum can go and people can get stuck in trades. So just don't load the boat long just because I'm like, oh, it's not that big of a deal. So we'll just say that.
I've had a bearish tilt for a while now, but today I'm looking at today's action. I've been waiting for some sort of capitulatory move, some sort of, event in the futures market. I don't know. Were we like limit down last night? I was out to dinner, but didn't they open up down 3-4% at 6 o'clock last night? So you haven't seen this fear yet. And this has been a nasty corrective wave. It should come with some sort of capitulatory low where at least people get a little scary, get like a markets in turmoil special or something like that.
Well, so first off, I'm not sure we're entitled to capitulation in the markets we have now. They're driven so much by the options market, and there's all sorts of weird derivative things where it wags the dog. And so if you're looking for capitulation, like Apple capitulated back in March, Tesla capitulated, like the rug pull that we saw in Apple was pretty exceptional.
Sure.
Even with, I don't think Amazon's taken a huge dive, but it's still well off of its highs. So these Mag 7s have been rolling train wrecks for like 2 months now.
Yep.
And so last month was weird because the market was selling off and like Apple would hold up for a good, week or two, and then it just got killed. Right. Tesla got killed first, then Apple, then all these others. So we haven't seen it in aggregate in terms of a V bottom, but a lot of these things have taken a giant dump, statistically significant to the downside that we would somewhat consider as capitulatory, but it's just been on a component basis. How's that?
No, that's good. I like that.
Right. Yeah. So I think, defense stocks would be pretty easy right now to just think of. One long-term idea I like is Huntington Ingalls. Our Navy is in deep shit right now, just on its own. Our shipbuilding capacity is down. Trump wants to build 40 icebreakers because we want to do Arctic defense, and we have 3 right now.
Wow.
And Huntington Ingalls is one of the 2 shipbuilders that we have They just had a really nasty move on earnings a month or two ago. They recovered that pretty quickly, and now it's tapping up against resistance. So
gap fill move back towards 250.
Yeah, it's possible. I'm not sure chasing the breakout first. You might see a failed breakout at first, but if it remounts above that, I think it's a pretty decent theme that you can start thinking about. Palantir would be another one like that, where it's a software stock and it's a defense stock. They have to operate inside the United States, and they're due to export controls. And I don't think buying the dip makes sense. There's actually a resistance level right there at 89.42 that if it gets back above that, I think it's good for some decent upside for a trade there. So just it just requires, a little creative thinking instead of saying, I just want to buy the NASDAQ on its own.
Will you dabble into international markets with your options trading?
Yes. The Lucy in the football trade with China, where they put the football down. They're like, hey, here's a juicy breakout. I know you want it. And it's like, nope, your exit liquidity for these guys that need to get capital out of China. And so I think I like Tiger, I like K-Web, I like Baba, Baidu, all those others. They're still solid bets. Again, second order thinking. It's like how much, the e-com plays that are getting screwed because it's not just about Chinese tariffs. They also said small packages are also going to be tariffed as well. And that was a big, big deal, especially for the e-com plays. So I'm not sure PDD is going to do exceptionally well right now. And just think about some of the Chinese plays that have more exposure to the Chinese consumer rather than, trying to get access to the American consumer. I think that would be a good way to start thinking about it. And like you said earlier, Steve, there's waiting for price confirmation is probably a good idea. You don't have to hero long this market right now.
That's right.
You can wait for evidence of a bottom. We put in a decent support level in the markets last week. Wait for a push back above and then a retest of that support instead of trying to nail that V bottom right now.
I love that.
So I'll just say this one more thing with the options market. We might see an instance, and we're starting to see it now, when the speculative fervor wears off and you stop having a bunch of people chasing call options, those call options start to get really cheap because there's no longer any demand. And it's called option skew, and there's some advanced stuff. But if you respect the nature of this volatility, some of the best setups are going to be 30 to 45 days out in expiration for the options market and about 30 delta on your options. So a little out of the money. And I know a lot of people don't like buying out of the money calls, but relative to the volatility that you see in the market, those tend to be the best bets. All right. So I think if you're going to structure your risk to the long side right now in this market, you probably don't want to be Delta 1 with a bunch of exposure. You can look at call spreads, call butterflies, maybe some out of the money calls as well. If you want to be, a gunslinger, don't go full size, scale in. Don't be an idiot with this. All right. Everyone just relax.
I thought people loved buying out of the money calls.
What's that?
I thought people loved buying out of the money calls. No?
Well, they love it when it's hot, but if you just think about the nature of reversion, a lot of the reversion doesn't get priced into those call options just because there's no demand. Like everyone's selling those calls, they're saying, oh, I got to do covered calls to try and get my basis down and all this other stuff. They get left for dead. And I don't know who has the table, but there's a couple people on Twitter that are showing like some of these stocks where the call option skew has been left for dead. And those are probably going to offer really good convexity as well.
So will you run scans in those environments that you're describing that maybe we're heading into? Will you run scans and look for the cheapest call options that you can buy? How do you find them?
I'm just going with my go-to and the most liquid stuff.
Got it. You have a universe.
We just looked at Huntington Ingalls. The options market sucks on that one, right? So you're going to be left with about 50 to 75 good liquid option markets that you can play for reversion, doing risk structures like that. So I think that's the best play.
Do you find yourself in this market with a different mix of being long premium versus short premium? When the market's increasingly messy, are you still mostly long
I
premium.
when we have markets like this,
Yeah.
especially when the complicated option stuff, warning,
Sure.
when the vol markets go into backwardation, so when people start getting really concerned about short-term risk, it is usually commensurate with actual volatility in the market. And so it becomes more difficult to sell premium because you're going to get run over. And sometimes, and I learned this lesson back in 2018, and then I applied the lesson really well in 2020, that sometimes you want to be net long volatility into a volatile move.
Right.
Because some of the biggest moves to the upside in the markets occur during bear markets and volatile events.
Yep.
Right.
No,
So even if a straddle looks expensive relative to what? Things get weird this weekend. You might want to just own a straddle, and just say, I want to play either direction.
So sometimes when you can get a lot to sell premium, it might not be the best time to sell premium. It's almost deceptive in a way because it comes with a much higher risk.
There is a graveyard of investors who try to short options just because they think the premium is juiced.
Yeah.
Earnings, FDA events, super volatile markets like this, from a risk reward perspective, sometimes it's just not the best idea to load up and just sell puts and hope for the best. Time frame and leverage matter, of course, but if you're going to be a little bit more degenerate and speculative, selling put spreads right now, it's a tough trade, right? If the call options are cheap, call flies are cheap, that's an easier way to get some exposure in this market. That would be a better bet. And again, you don't go all in, you scale in. I'm probably early looking for reversion, and that's why I'm not doing the open right now. So that's kind of where I'm at right now.
This is great, Steve. Always a pleasure to chat
right
market
on,
with you.
Steve, Steve's doing you're doing a live event today. I'll drop in the chat as well. For anyone that wants to pop in, there it is. Steve Place, man. Thanks for coming on.
Take care. Later,
Steve.
All right.
I was confused. I was like, "What's Steve?" I was like, "I have a live event today." I don't think so.
No. Damn, that was good stuff. Steve,
drop our interview. Drop our interview with Steve too, because we dove in a little further to kind of the point he was making there. I love his mindset there. Being short premium at the wrong time is one of the toughest lessons to learn, and it's one of the most important that I've ever learned.
Yeah,
this is something that Sean and I will always disagree on, and we're both right. For me, when premiums get juiced and you're looking, you're saying, "Oh my gosh, I should sell premium in this." It's usually a time, because Sean will come to me and say, "Oh, look at the premium," right? It's usually a time where I'll look at the charts and say, "That's scary," right? This is vulnerable. In other words, they're usually more expensive for a reason. It's almost like, Spencer, it's like a value trap. Selling puts at the wrong time. They lure you in. Oh, I'm gonna get paid so much for this.
I just dropped the link to your interview with Steve on Off the Tariff show.
Sean and I had a great chat with him.
Yeah, so I just dropped that in chat as well.
Really experienced options guy. Always a pleasure.
Yeah. I think Fonz, I'm good. We'll have Sean on in a few minutes, but I'm gonna try. I know Steve wants to hop at the open and get some stuff down.
I'm
done.
out in 8 minutes.
Yeah, today's going to be a day where we don't hang out till 10 o'clock. I do want to hear from Sean, so whenever he joins, we'll bring him on, and we'll just try to get off as few minutes as possible, just because it's going to be wide open, right? Speak of the devil, here he is actually. So we might as well just bring him on, and do the show until the open, and then roll.
Let's go. Hello.
Happy bear market, boys.
Oh, I see what you did. Yeah. I got my red on.
Hey, so great talk with our friend Steve Place. That was awesome. I found myself nodding along with him on a lot of points. And one thing that you guys didn't really touch on, which is fine. You may remember, I think it was in our analyst meeting last week, or maybe it was on the morning show, but I think it was in our analyst meeting last week. JC was, we were talking about VIX, and you might recall that I was telling him that at the time, I didn't believe that the lows were in. And we were talking about VIX, and JC's like, well, if the lows come in, what happens to VIX? And I said, well, I'm not so sure VIX will break above 30 just because we get new lows. I mean, if it gets above 30, then, then real bad stuff is happening. Yep. And right now, VIX is showing an open around 27. So still below the highs that we had back in, mid-March. So I think that kind of corroborates what Steve Place was saying about how, the headline number right now, the S&P down 3% from yesterday's close, things like that. Like, those are scary numbers, but is the market really that scared yet? And I think I'm with Steve on that. I don't see it, not yet. But yes, the low is not in. The low is not in yet in the market. I mean, well, maybe we might find out that the low is today. We'll see.
I think we're set up for a big red to green today. And here's the thing. That
wouldn't surprise me.
Now that we got the announcements out of the way, are we not set up for some really positive news going forward? Think about it.
Yeah, Steve, I hadn't considered what you were talking about at the top of the show this morning about how this is just the first round. This is we just threw our number out there in the negotiation. Now everyone's going to come back with theirs. Yeah. Yesterday's event wasn't the end, as a lot of people thought it was. It was actually the beginning. I hadn't considered that.
So, like, does Germany come back and say, okay, 50% back on you? Or are they like, okay, what do you guys want? Let's make a deal. We don't know, but those are the next headlines to come. And they're going to come one country at a time, and it's going to be suck out here.
But is it going to get crazier than it was yesterday? I don't know.
Again, I don't know.
Well, look, I don't remember who it was. But I saw somebody on Twitter had a really great take yesterday saying that now that the U.S. has thrown their numbers out to the world, and that's the opening salvo in the negotiation, he was arguing that the companies or the countries that come back and negotiate with us first are going to get the best deals. Dude. The countries that take their time and sit on their hands and kick the dirt around, they're going to get shitty deals. So every country is going to be motivated and incentivized to come to the table quickly and make something happen, or they're going to get left on the side of the road. And I don't know if I agree with that, but I thought it was a very interesting take. And hey, that could lead to some good news. We'll see.
For sure, I agree with that take. Yes.
I think Germany will care. The EU can't do anything right together. I'm sorry. Like, we have the data. They're all going to band together. One of them's not going to fall. Get out of here.
They created a currency once that's worked out. That's worked out okay.
It's doing great today. Shout out.
The amazing thing about the EU, which I find amazing, just as a human, is that the entire country or the entire landmass of the EU basically would fit in the continental US, right?
Right.
But within the EU, you have 10, 12, 14 countries that are all so dramatically different from each other. Could you imagine if the United States was like that? I mean, that just blows my mind.
It is, but the difference is we have the word united in our country's name and they don't. So
no, I know. I'm not saying they're united at all, but I'm just like, they have different languages, they have different customs, they have different cultures. Like that's mind blowing. Could you imagine? I mean, look, in the US, we could argue that people in Alabama are different from people in Montana. Sure. Right. And New York is different from Seattle. Right. But those differences are small compared to the differences in the countries in the EU.
So it's a miracle they're able to get anything done over there. Is what
I just find that amazing. And this has nothing to do with markets. I just that reminded me of that.
Guys, this is literally the best day for the euro in about 10 years right now. When was Brexit? Was that Q2, Q3, 16, Spencer?
It was 16. What quarter it was? I can't tell. It was November of 16, wasn't it?
Yeah. 16, 17, yeah.
So you'd have to go back before all the Brexit volatility to find an update like this for the euro. That's not nothing. That's some starting line momentum. You got a big base here.
Side note about Brexit. I mean, the reason why I know that it was 16, 17 is because Brexit, strangely enough, is the reason why I live in this house right now. Believe it or not.
Brexit did it? Why?
Okay.
Because the reason is because in 2016, my family, we were renting a house from a empty nester couple who worked for IBM. and IBM sent them to Europe to work on some 5-year project, and that was, and so they needed somebody to rent their house, and we had this beautiful house that we were paying way below market rent for, and we were happy as shit about it. And about 1.5 years into living there, Brexit happened, and the couple that we were renting from, IBM told them, well, Brexit fucked up your project. You guys need to come home now. And so they needed their house back, and we had to scramble to find a new place to live, like in a hurry. And that's how we ended up in this place. And we couldn't be happier. Like, it worked out. We love where we live now. But at the time, it was very scary.
Shout out Brexit.
Sure. Shout out Brexit. All right. Here, let's just hop off now. We're about to open. We got a busy day on the channel. Steve's
breaking out too. Shout out,
yeah.
I mean, go look through your Forex charts today, people, because there's opportunities here. There are short dollar opportunities abound more and more every day. I'm all for it.
Steve, hurry up and do nothing.
Yeah, we gotta go
for a little bit.
If you are in Breakout Multiplier, weekly strategy session is in an hour and a half. Options Jam session with Sean at noon. Chart request live at 1. Jason Purrs is going live with the Gold Rush at Options Jam session at noon. Start that again. Steve at 11. Sean at noon. Chart request live at 1. Jason Purrs at 2 o'clock. Full schedule today. Louis is doing a live video at later on this evening, 7 o'clock. A lot going on.
I like the Bitcoin. Louis, tune in to Louis for the Bitcoin.
Yep. So
watch
that's what we got.
Bitcoins here today. Watch your Bitcoins close.
We'll be back tomorrow here for it all. As always, thanks for watching. Smash the like and go make some money. Hurry up and do nothing. All right.
Solana
stocks ripping higher at the open.
120. Get involved. All right.
I can't take no loss.